Valutrades, Forex CFDs and commodities.
Good evening, everybody. It's Paul here. It's Tuesday, the 5th of December. Thank you very much for joining us during this rather busy end of the year run. So I appreciate you taking the time to come and join us for our once more in our Valutrades series of webinars. This evening's webinar, what we're going to talk about in our video is a recap of, in particular, the Forex markets through 2017. And we'll also have a little bit of a preview of what we think may happen in the year of 2018. We're going to focus mostly on Forex, but I'll be tapping into a couple of the other major instruments. As we all know, we live in an interdependent world these days, and there's some fantastic opportunities that have been during this year, and also we'll touch upon them as we look at the year ahead. Before that, as always, I'm just going to begin with a quick risk disclaimer. CFDs and FX are leveraged products and carry a high level of risk to your capital. It is possible to lose more than your initial deposit, and you may be required to make further payments. These products may not be suitable for all clients, so please ensure you fully understand the risks involved. So, as I said, we're going to do a recap of the year, what we've had carry on so far, and then also have a little look at the year ahead. And as my top point there has been, is what a year so far we've had. I know after 2016, many people might have said that was 2016 was quite a year with regards to some of the events that we happened, and I'm sure you all remember them well. But 2017 so far has turned into another bumper year in terms of the events that we have seen happen, and also maybe some of the changes in direction or some of the results that and outcomes that we've experienced so far. There's been some very interesting points, and of course they've had an impact in the financial markets, and in particular they've had an impact in Forex markets, and that's what we're going to have a little talk about. Okay, how those major moves played out this year, and how do they play through into next year. I don't foresee 2018 being any less eventful. There's a few elements popping up which we will talk about and we will cover on, and maybe have a little chat about what might be the implications for ourselves as traders. And then what I'm going to do, we've got a couple of slides here, and then I'm actually going to switch across to the charts. All right, we are technical traders for the most part, and it makes sense to us actually to go through some of the charts as I would myself, and show you how my charts are set up, how how I would do my own simple analysis, and what we would look for, and what can we start to build a plan around. I'd also, offer this up to a little bit of a trader's clinic, in the sense that, if you have any questions about, the upcoming year, or if you have any particular questions regarding your own trading, then shoot them out as we go through the charts. I'll be happy to help you wherever possible as I can, and there'll be a few conclusions, and also an element of, what can you take away to action yourself. All right, and throughout it all, we have, we'll happily take questions. You can pop some questions in the chat box there. We have the Valutrades staff here who are happy to sort of help, answer questions in terms of any technical questions you have, and I'll happily wade in with any trading related answers that you require. So, when I sat down to sort of have a little look at, what are the things that we've experienced and seen this year, I started to just put down a few notes, a few pointers there, and quickly realized that I was going to run out of space. That in fact I could have filled a couple of slides with what we've experienced so far this year, and if you just quickly flick through that, we've packed an awful lot into 2017. As I said, people might have thought that 2016 was quite something, but actually 2017 has been probably even more eventful in many respects. But we began with that lack of follow through in European populism in particular. We had the Dutch elections earlier the year in the Netherlands, and then of course we had the French election. And there was in the Dutch elections the far right, okay, were did not achieve the success that they experienced or expected to, and quite truthfully, in the French election, Marine Le Pen didn't achieve the sort of result that many people would have expected, and in fact, our man Macron stormed to the top of the charts, and that had the knock-on effect that we had, what we kind of call the Macron bump, in certainly in European indices and in the euro itself. From about April onwards, we had a great run in the euro, and invariably what we also saw was effectively a real sort of strength in the euro, which I'll touch upon as we look at the charts later. One of the two things that have hung over, let's say, the kind of European side has been, what we may talk about is the kind of the Draghi dance, and most of that was about what he was going to do about QE within the European Central Bank, and invariably he brought us a resolution, a solution, sort of a month or two back, and that has had an impact, but it's there's still a long way to go on that. And invariably people are still a little bit, despite the strengthening of, let's say, the Eurozone area, people are still looking for one or two of the final skeletons in the closet, and we'll touch upon that with what we're looking for in the year ahead. Not surprisingly, here we are in the UK, okay, and in Western Europe, and then we look at Brexit. All right, some people would be fascinated by every twist and turn in Brexit. I'm sure there are other people who are completely jaded by it, because they hear about it morning, noon, and night. But the reality is, as traders, it's had a huge impact upon our opportunities within the market, certainly within sterling and euro, and the relative indices as well. And we're going to talk about that. And having had Macron win, we then had the UK Theresa May call her election, and subsequently pretty much went out to fail it and lose it in every way possible. So she did win, but only by the skin of the teeth, and only by a little bit of political shenanigans. And that led us to a little bit of a summer of discontent, which had an impact on sterling initially, and then also we had wobbles in the FTSE. But actually, as we've seen, we've actually seen an element of strength come back into both, certainly most of sterling and a little bit of the FTSE, but most definitely the sterling. And we're going to look at that on the charts and see, that has kind of confounded the critics. If you look in the mainstream media, we're a year or so ago we were talking about how the sterling was down in the 120 zone, and how 110, 105 parity. All right, with both the dollar and the euro was expected by the mainstream media, and actually, if we look at that, that's not really been the case, and we'll look at that in particular. Then, of course, we look at the big one, all right, namely the US market, the US economy, the US indices, and the US dollar. We had the Trump trade, if you remember, this time last year, after Mr. Trump got himself into the White House, and we saw a fantastic run on the US indices, and that kind of raging of the US indices has continued, and has really, if anything, it's only sped up, certainly in the last few months. But with that, we've also had the sort of the Trump fade of the US dollar. I'm going to sort of talk about that and show you a few charts on that later, which to be fair, that's actually what he wanted, but we'll come back to that. For a lot of the year, we had the Yellen flip-flop, all right, in terms of what she felt was going to happen to the U.S. economy, and whether it required any more interest rate rises, and if it did require interest rate rises, how many were we likely to see? There was also her job in particular, that that she was coming towards the end of a contract, and we'll talk about that a little bit later. Touched upon, we've had some of the pain in the condols. For those of you completely new to trading, condols, what am I talking about there? That's really the commodity dollar currency. So here we're looking at Canadian dollar, Australian dollar, and Kiwi dollar. You'll hear them sort of bounded about as the condols, because invariably they're kind of the economy, their currency is linked to the major commodities, which basically then links into a play and a story about China. We're going to touch on a little bit of emerging markets as well. Then we had Japanese. All right, we've had we had indications that we think that Abenomics is finally working, which is just another massive Japanese QE program, and certainly it seemed to have worked well enough that during the recent Japanese elections, Shinzo Abe and the head of the Bank of Japan, Kuroda, were effectively re-elected, and so we can expect to see more of the same for certainly in the short period going into 2018. As I've touched upon the raging US indices, and I suppose as one of the kind of strange outcomes that maybe people didn't expect is that after the French election and the lack of follow through with the Dutch election, I think people maybe thought that Merkel was a shoo-in for the German elections in September, but that is not the way that's not the way it's turned out, and and effectively we've had a few months of let's say how would you describe, a little bit of indecision as they try to form a clear government in Germany that would allow them to carry through their program, but also provide the kind of leadership to Europe that the Europeans look at. I'm not going to talk about cryptocurrencies in particular this evening, but I would be remiss of me not to talk about it without sort of saying that this year cryptocurrencies, and in particular the likes of Bitcoin, have announced themselves very clearly. When even the mainstream media are talking about the shocking rise in price of Bitcoin, it's invariably that it's coming to us in terms of in terms of it has arisen. It has arrived on the scene, and people are starting to understand and get to hear and talk about cryptocurrency. So I'm not going to talk about that this evening. That'll be something for the future, but it would be remiss not to be able to talk about it in terms of the future for trading, and also in the FX, and maybe that element we will sort of have a little touch on. So, if we talk about very quickly before we cross across to the charts, we're going to look about Forex for 2018. Well, you have to start with the US dollar, don't you, really? The US dollar is the reserve currency of the world. We've also had some wonderful moves in the US dollar. When Trump came into power, he said that he wanted a weaker US dollar because he felt that would be good for business, that would be good for the US economy, and he's got that. And if you were to judge by the the stock markets, you might say that he's achieved his aim. It's a little bit more complicated than that, but certainly he wanted a weaker US dollar, and that's what he's got. And I suppose in that question is that, well, can we expect more of that in 2018? We had up until sort of about a month ago conversations about Janet Yellen's contract running out sort of January, February 2018. And the song The Clash, it was a case of would I stay or would I go now? And it became clear that Yellen isn't staying around, and that there was a new man. Your man Powell has been announced as he'll be the new head of the Federal Reserve, taking over from Janet Yellen. And of course that means that people are looking to him to say, well, what's he going to be like? Is there going to be a massive or drastic change in policy? And so far we've not really seen anything to imply that he'll be completely different from Yellen, though undoubtedly over the next few weeks, as he moves towards taking over the position, there'll be more information and more tweaks upon that. But as FX traders, what people are really interested in is, are there going to be any more interest rates rises in the US? Yellen sort of lost a little bit of credibility because of her, ability to flip-flop over the data. 1 week should be talking about, how interest rate rises were going to be coming down the sort of the road thick and fast, and then the next week should be talking about how she might have to sort of raise QE again in order to bump the economy. So that kind of flip-flopping didn't really help her a great deal, and actually that kind of confusion didn't really particularly help. But it is it's the underlying conversation that all of the traders are interested in, is namely interest rate rises in the US, because it has such a knock-on effect throughout the entire world. And I suppose if you're looking at 2018, all right, and then you're looking at, well, can Trump keep himself out of trouble? he has done a pretty good job of keeping himself in the news for perhaps all the wrong reasons, it might be said, regardless of whether you love him or loathe him. And the question is, will he be able to sort of stay away out of trouble going forward? And if he can't, what kind of implication will that have upon the US market and the world in general? So let's have a little look at Japan. As I said earlier, when Shinzo Abe came out with Abenomics 2.0, he was a pretty aggressive in his desire to basically lift the malaise in Japan that had been there for 25 to 30 years, and people say that it seems to be working, flooding the market, buying Japanese bonds, flooding the market with yen, devaluing the yen appears to be working. What has maybe been a little black cloud is the kind of geopolitical situation that we've seen with North Korea over there. Of course, they're just across the Sea of Japan, and invariably, should there be any particular, let's say, any conflict on the Korean Peninsula, it's not unsurprising to think that Japan might capture some of the let's say collateral damage from that. So invariably, people will be keeping an eye on that in 2018. But in reality, Japan and Abe doesn't really have massive amounts or ability to influence the outcome in North Korea. And that is down to the young man in North Korea, Kim Jong-un, the Chinese, and Trump, and between that it'll be resolved if at all. But what he has done very well is Abe, has wanted to be friends with Trump, and he has done a very, very good job of creating and building a relationship there, and that has a knock-on effect, into the picture for the yen. And also, we'll have a little quick look at the Nikkei, the Japanese index, as well, because that makes for an interesting chart as well. And with Abe's re-election, and he had a strong re-election, what we're going to see is probably more of the same. All right, certainly for the first year into next year of his second term. So let's have a little quick chat about the euro. So 2017 was I call that like a breakout year because effectively certainly for the euro against the dollar, we had a real breakout. Euro had been in that range between about 104.50 and 114.50 for about the last good few years, last 3 or 4 years, and we saw a break at that, and part of that was effectively down to the Macron bump, and that flowed through into the DAX because once Macron won, everybody was happy and resting on the laurels in Europe, and we'll look at both euro, dollar, and DAX. That sort of that kind of let's say that all that goodwill sort of hit the buffers a little bit in September with when Merkel was unable to gain a clear election mandate. But if you were to look at the charts, the euro and in particular the DAX hasn't done too badly for regardless of the political instability in Germany. What do we think about for next year? Well, invariably, it's about solidifying Merkel's future. Even if she does form a government, how strong will it be? Will she spend more of her time and energy on, infighting on domestic matters and issues rather than providing the kind of leadership that European countries want, and also, overseeing the Brexit negotiations? What we also have is that we are due to have the Italian elections next year. Now, if I understand that they've been moved back, and the talk is it'll probably be April 2018 at the moment, and that if you think about it, that's because Renzi couldn't get his referendum passed back in almost December last year, and since then he's been he stepped aside, and we've just had a little bit of a vacuum there in Italy. And one of the underlying elements is that there's sort of some of the issues that we've seen with Italian banks, and from my understanding, I don't consider myself an expert in particular in Italian banks, but we have not yet seen a proper resolution to some of the issues with the Italian banks and their debt problems, and it'll be interesting to see what, if any, impact that has on A, the Italian elections, and B, the kind of eurozone in itself, and of course that has a knock-on effect into the euro and the other European indices. And then, of course, we're talking about the big guys. Well, then we have the UK and sterling. All right, so it's I think it's fair to say that 2017 saw sterling get knocked about a bit. Okay, so far, I say so far, we've only got a few weeks left, but I think maybe what we've all learnt is that anything can particularly happen at the moment. And what we look at is, we had FTSE meeting new highs. All right, we've had a little bit of malaise since then, but those Brexit concerns, initially had a let's say a drag effect on sterling, but actually, as we'll see when we look at the charts, in particular, sterling has, certainly against the dollar as well, has managed to hold its own. It's been able to fight its corner, and from the let's say from the lows we saw, just over a year ago of 120, we're actually nudging our way, and we've been climbing away from that, and we'll look at that in the particular charts. A lot of that, in terms of the strength or perceived strength, is has happened despite, let's say, some of the political shenanigans and insecurity that we have seen, and questions about how poorly Theresa May did in the elections, and also how she's done since, and what is her future. How long will she be sticking around? All right, so depending upon what newspaper or what Twitter feed you read, some she'll say she'll be gone by the end of the week, others say she'll be gone by the end of the year, others say she'll stick out the time. So I have an opinion that events will probably drive her career, and we shall see that. We've seen it this week alone in terms of the lack of the inability to get a deal done over the Irish border, and the concerns there from yesterday, and where we're going to move towards, and trying to achieve that in the next week before the big European Union meeting on I think the 14th. And not surprisingly, what we've seen that in terms of both the euro and the sterling rates is that we've seen elements of volatility, right, where there have been the impact of news announcements have knocked markets about, but then also a case of actually a little bit of stagnation, and I'll talk about that later. I'll show you how that plays out on our particular charts. Yeah, and sort of kind of starting to round up there. What we have is looking at what I said, the COMDOLs, the commodity dollar currencies, CAD, Aussie, and Kiwi. What we started off with the year. Some of you may remember that actually last year, we thought there might be a little bit of a crash in January last year because China looked to be unraveling, but it turned out that actually it's not as bad as expected. And if you think about it, China's been very quiet this year in terms of the news and the information that we've seen about the Chinese economy, the state of it. I don't consider myself to be a Chinese economy expert in any way, shape, or form, because the information is sparse and somewhat opaque. But what we do is we get our insight into it via FX markets. We'll look at the US dollar against the Chinese yuan. We'll have a little look at that, and also see, well, how has that had an impact upon these commodity dollar currencies? Who they pull their commodities out of the ground in one way, form, or another, whether that be gold, whether that be copper, whether that be oil, whether it be soft commodities in terms of sort of milk to China for New Zealand. And it's a case of for most of those countries, they've had a bit of a boom for the last 10-15 years because basically China hoovered up all of their supply, and that has had an impact in markets. Okay, and we'll look at that. So 2017 has been a volatile year so far, right? We've still got a few weeks left. I've learned not to count my chickens anymore, and I'm expecting 2018 to be more of the same. We're going to have a look, and we're going to look at the charts now and talk about, are we going to see sort of dollar weakness to continue? It'll be an interesting point to look at. Also, Japanese weakness, okay, is is that going to continue through because of geopolitics in terms of North Korea, and also Abenomics, is he going to stick with his particular plan? The euro strength that we've seen since about April of this year, will that continue until Draghi has to change a plan if he has to? And also when we see a complete solution for Merkel and the German government. Not surprisingly, sterling is quite sentiment driven, all right, based on the Brexit negotiations. So I suggest to everyone to be wary of that, because that can quite literally turn on a dime, so to speak. And the commodity dollar currencies, as I will show you on the charts, they have weakened considerably. The question is, has it been overdone? And I suppose the interesting question that I always pose to all traders, regardless of whether you've been trading for 2 weeks, 2 years, or 2 decades, is when you look at this chart and you look at what's going on in the world, do you see it as a threat or as an opportunity? Because an awful lot of the way could be, the way you view this data, the way they view what the markets are telling you, will have an impact upon what your own particular trading plan is for 2018. So that was just a few slides to give us a little bit of a almost like a little bit of a teaser, a little bit of a just a setup. And what I thought I'd do now is let's see if we can just move across to the charts and just actually have a little look at some of the major charts, and that'll be a bit more interesting because we can talk about how we look at and what we can look at for the year ahead. So if you just bear with me for one moment, we're just going to try and switch across now. Hopefully the technology will work for us. Super. So I'm just hoping that will catch up, and hopefully you can still all see my screen. Hopefully you can all still hear my voices. I'm just gonna check that everything's working there. Okay, that the technology is working for us as always. That's what we're keen to pick up on. And yep. So if you can just confirm that you can hear my voice, you can see the screen, and then we'll crack on. As always, the sessions are being recorded, so you'll be able to work in and look at them. So why don't we, here we have, what I have here is just a little profile. This is just a very simple profile that we have in MetaTrader 4. Okay, that is very, very simple to sort of set up and view. And what I have is, I have particular profiles. This one, as you can probably see down here on the bottom of the screen, is market overview. What do I have in here? Well, I have just a range of indices and commodities that give me an overview of the major markets. Nothing. You'll find very, very simple how I operate. And let's very quickly look here. What I have here on the these are all weekly charts. All right, weekly charts here. Those of you who know me know I love working off weekly charts. I think they're fantastic to be able to trade from. Okay, especially if you're trading part time around a particular you have a day job. Being able to do a little bit of work at the weekend is a fantastic way to operate. I'm just going to very quickly go through some of these here. All right, this is the Dow Jones. All right, it's the Dow 30, and every candle represents a week. And we're going back for the last year, and we say to traders that you should always want to be trying to trade a trend. You always want to be finding a trend. If you look at that and can't see the trend in that, well then you probably need more help than I could probably give you. But what you can certainly see is that has just been one-way traffic. It's been a beautiful, beautiful trend. All right, and for most of technical traders, you're either going to be a range-bound trader or a trend trader, and when you have a really dominant trend, like that, you're really just looking for opportunities to buy and to move that, to sort of ride that as much as possible. And what interests me is, what I do take interest in is, we've seen over maybe the last month or two as, prices accelerated a little bit away from the moving averages. For those of you who are completely new, I have very, very simple setup here. I have a blue 20 period moving average, red 50 period moving average, and a green period 200 period moving average. Very, very simple setup. I have little elements here called fractals that you can find that come with the MetaTrader platform. I'll just quickly show you where you can find that. If you go up to the top left, insert, indicators, Bill Williams fractals. There you go. Bill Williams wrote a couple of books called I think it's called New Trading Dimensions and Trading Chaos, about chaos theory within markets, and part of that is fractals that he talks about. What is very quickly, what is a fractal? Well, let me just make it a little bit darker so people can see. That maybe stand out a little bit more. So invariably what happens is when I see an up fractal like we have here, that basically means the high of that candle is higher than the 2 candles before and the 2 candles after it. Okay, so it's like a 5 candle thing. Hold your hand out in front of you, okay, and with your middle finger is the fractal one, because you've got the 2 fingers either side are, the peaks of them are lower than the main peak of your middle finger. And on the downside, okay, a down fractal, the low of that candle is lower than the two before and lower than the two after it. And so when I start to see, these move around, okay, when I start to see several of them in particular areas, on charts, it gets me interested to see as an indication of where we're seeing, support, resistance, or supply and demand, depending on what you particularly how you like to define it. But what we're looking at, the American index, I said right in one of the first slides, they've been raging. You can see that that's what's happened this year. That has been raging, okay, and I personally thought we might see, a correction towards the end of the year, and I was wrong on that, okay, and I had my view about what happened, but the reality is, you have to trade what you see. Ultimately, my opinion, is it doesn't mean anything. You have to trade what you see. And when you look at this chart is going up. So what should you be doing? Well, when markets are bullish, you want to be a buyer. Simple as that. And that's a story that is pretty much replicated across a lot of the indexes. And the American index, here's the S&P 500, okay, which is the bellwether of the world. It's pretty much telling you the same story as the Dow Jones. You can see that it's just been in a cracking uptrend. It's accelerated a bit over the last few weeks, which wouldn't surprise me if there was some profit taking towards the end of the year. So we might see a little bit of a fall back, okay, just as we get towards the end of the year. But that trend is still firmly up, and that's what you need to be. You need to be bullish when the markets are up. We have the US 100, which is the Nasdaq 100, okay, which has been a little bit more volatile than the other two. We've had a few weeks of occasionally of messing around, and it's at the moment, looking at it, it's maybe running at a little bit of steam, but at the moment I would just be expecting it to just effectively take a little breather. So it's quite a few. What you have to remember is quite a few institutional traders will be trading on a basically calendar year basis, and they'll be looking to bank their profits towards the end of the year. It's coming up towards bonus time. So American indexes, they're strong, they're going up. But also have a little look at this is the Japanese index, okay? Japanese index here as well. And what we can see is, it's not been maybe as clear as those US indices we saw, but look at that, that is still in a very nice uptrend, and that since Abe was re-elected, you can see that effectively, with the last couple of months we've seen that just accelerate, and we're up to this interesting period here around 22,500, all right, which is goes back to where markets were many years ago, and we're seeing all sorts of a little bit of maneuver there, okay, a little bit of a triangle, a little bit of a coil up there, but at the moment I don't see anything to make me change my view on that. Japanese index is still going, it's still bullish, all right, and that's where our bias should be. Just to finish off a couple of the very quick on some of the other indexes, because they do have an impact on the FX pairs. One of the interesting things we've seen is oil. All right, here's the US oil breaking out. It broke out of its highs. Why would be interested in it? Because there's an impact on the dollar. All right, and what we can see is that US oil, all right, WTI has been in just that uptrend for about the last 5-6 months, okay. We can see it, and it broke its highs, all right, and we are now up to particular levels that we haven't seen for a good few years. If I go out on the weekly chart, as I said, it's we've not really seen that since back in 2015. That's where we're looking at that particular area. So there has been strength there, right, in across the US oil market. We also have a little bit of look at gold, right? If I just go out to the monthly chart, I've talked a little bit about how I was expecting to see a little bit of a coiling up there on gold, all right, over on the monthly chart, which is what we saw. We did have a little bit of a breakout, but invariably it's just sort of settling there around about the kind of 1260 to 1300 zone there, and I'm just kind of interested to see what goes on there, right? So I have my own opinion. This is my own opinion is that in the old days when people got worried, people put their money into gold, but what we've seen this year is when people have been a little bit worried, they just buy Bitcoin. That seems to be the story, rightly or wrongly. That's what people are doing, and so it can whilst we're not talking about cryptocurrencies here, what we can say is maybe the kind of lack of interest in gold has been because that the money that would have gone into there has gone into other places, and that's one of the points to consider. Here we go, the German DAX. Now, as I said, once again, weekly chart. It has been in a nice uptrend, all right. Yes, we did have a little bit of a flag pattern there that happened earlier on in the year there. Okay, so I'm just going to draw that in just very quickly and simply. As I said, the weekly chart's lovely because you can just take an hour or two at the weekend just to look and find your charts. And the interesting thing is that even though we didn't have a very clear result. We had no clear result in the German election. The DAX still powered to new all-time highs. It did put in a bearish engulfing candle there, which we can see. Okay, but even when we just get one off, a bearish engulfing candle after a long uptrend, it is a strong signal. But we don't just look to sell when we do that. What we need to do is build a plan. So what we need to do is just keep an eye on the DAX. Is it just a breather as the German government starts to form and get itself resolved, or is it a case of Brexit having a little bit of an indication or an implication upon the German economy? And finally, look at that. The FTSE. I said that what we had after Brexit back here in 2016 is we had an inverse head shoulders and price punctured it, and we went along to new highs. But really what we've had is since we're in a little bit of a block now between about call it 7,600 and 7,200. All right, there's a 400 pip block there that we've been in for most of the year. Okay, for most of the year, and every time we get to the top it rolls away, and every time we get to the bottom it's rolled up. And now what we're looking at is a lot of this is about what we're going to find out as these negotiations and deals as we move on to the trade deal conversation, if the European Union will allow that, and we will see what happens there. Okay, and whether there are good negotiations or whether there is enough done to force the British to crash out without a deal, and perhaps that is an indication of why we've just seen the FTSE sort of knocking about there in a block for the last couple of months. So that was very, very quick going through some of the big, the market overview. So some of the big indexes, gold and oil as well, all right, because they just have, they have an implication through all of those markets, right? And that, as I said, I have weekly charts there. It doesn't take very long to do. You can see there very clearly where there's trends in the in the index and also in oil. Okay, and there has been in DAX, even though we've had a little bit of a move. Whereas gold and FTSE have been a little bit in a block there. So why don't we start with US dollar? All right, let me just bring this up here. It's the reserve currency of the world. It's the big boy. So what you can see here is, once again, I just very quickly set up the the 8 majors. We're on a weekly chart. This is what I like to look at, what I like to do. And here we go. I have pound against dollar on the weekly here, then the euro against the dollar, the Kiwi against the dollar against the Canadian, the dollar against the yen, dollar against Swiss franc, Aussie against dollar, and then I also have just the Dow as well. Okay, just to give us an indication. Not unsurprising to perhaps in these modern QE days, all right, that normally what we have seen is when the currency has weakened, effectively the national index has strengthened, and that's been the same for if you look at the euro and the DAX, you look at the yen and the Nikkei, you look at sterling and the FTSE, and also if you look at the dollar and the major American indexes. So pound against dollar. All right, let's have a quick flick at that. So as I said, we saw the crash down to 120, all right, in the earlier year, and we touched it again at the start of this year. But realistically, that what we've seen is pretty much just a grind its way north there from pound against dollar, right? A lot of that is probably sort of more associated with elements of US dollar weakness, which we touched upon earlier. But what's happened is from being round down to 120, okay, just over a year ago, we've been grinding our way up, okay, as high as 136.50. We can see there the high of the year. And we've fallen, but we fell back a little bit from there. But I suspect to see as the negotiations start to firm up and we start to get some a clearer picture on it, I think that will actually have an impact on sterling, because just because as markets hate uncertainty, and as they get towards that clearing that uncertainty, well then that's what we'll be looking to trade with. So in that particular case, what we've seen is sterling strength, dollar weakness. This is a story that's going to sort of cover through all of what we talk about. So dollar against the sterling, well, it's been sterling that's been strong. If we look at euro dollar, I talked about, okay, here we go. I'm just going to sort of draw in a couple of lines here. This is, whenever I'm sort of looking at a chart here, that's what all I'm doing is just literally, start with the monthly, go down to the weekly, and just draw in lines of support, resistance. Hopefully you can see where some of those fractals there have been very, very, very clear. Let me just update that a little bit, just maybe a little bit easier for people at home to join us. We can see, look, there's lots of fractals there, okay? That kind of, I was talking about that kind of 114.50, 115 level, and we were in a range there, okay, in a range for a good 2.5 years. And then we broke out of that, okay, in the summer. We broke out of that in the summer, and that's what we've been looking at here in the weekly chart. We had a very strong clean break. We assaulted, not only that, we assaulted the 120, okay, psychological handle. Let's just bring that up. There we go. Bang. So, we assaulted that, okay, and rolled over, and we actually had a bit of a head and shoulders pattern, but, we've had that euro strength come in. We're in an interesting, sort of dilemma here, namely that, it's the euro against the dollar. Neither of the banks, okay, neither of the politicians want their currency to be the strongest. Germany has done exceptionally well for itself because the euro has been weak, which basically means German exports, exporting their cars and such, are much cheaper when the euro is much cheaper. So they don't want the euro to get too much stronger. Similarly, US dollar, harbors the same view and idea that, namely, they want the US dollar to be cheap, okay, because that makes the American exports much more competitive, and with that demand for US exports, that's what Trump has backed in terms of his plan to sort of buy America first, in terms of making sure that both jobs and capital are relocated to the US. So there's going to be a little bit of I think there's going to be a little bit of a battle of that going on, in terms of each one trying to try and be weaker than the other, because they know it suits them. All right, it particularly suits them. So that's why I have that run up, okay, for the year, the Macron bump, which started it all off. Now we're kind of hovering around that kind of 118 to 120 zone. All right, and I suspect we're going to see a little bit of a battle going into 2018. I expect us to continue that battle. Then you have to think about, well, what could possibly change that? What would actually possibly change that? All right, well, what would change it is if problems in the Italian bank start to leak out, and invariably confidence in the eurozone starts to weaken, well, not surprisingly, then you might see the euro weaken and the dollar strengthen. Similarly, we've had the tax plan announced in the US. Some commentators thought that might be the thing that kind of punctures the bubble that has been driving these markets for the last about sort of 12 to 13 months. In which case we would see increased dollar weakness and euro strength in that. So where we are finally poised, we're a little bit of a tipping point, and I'll be saying just keep an eye on this, okay, between that kind of 118, 120. Certainly back above 120 and closing above there is very strong, and very is a very bullish sign. Right, back beneath that kind of 114.50, 115 level is very euro weakish. So we should be keeping an eye on that. Let's have a look at dollar yen. Then we're looking at the kind of the big boys. All right, here we go. Weekly chart again, and for what I've sort of noticed for basically a good part of the year is that dollar against the yen has just really been in a little bit of a little bit of a sort of tightening range. That's what that's what we've seen, and in particular, we've seen this treble one number, okay, as acting as almost like a little bit of a reference point, okay, a little bit of a reference point. It's been pivoting back and forth from it, all right. It just gets to the top of the range about 114.50 and comes down, and it gets to the bottom of the range about 108 and comes back up on that, and that's what we've actually seen. And here's an indication of what you're seeing is you can see you have price and all three of those moving averages on the weekly chart in very, very close proximity. They're all sort of kind of glued together. They've all come stuck together. And what I've learned over time is that when you get into a period like that, it's almost like the market is coiling up, and it's like when you try and push sort of a two ends, two ends of a magnet, two ends of a magnet where there's where there is the kind of there isn't the correct polarity. What happens is you push them again, and the magnets force themselves apart. They don't want to be joined, and it's a little bit like that in the markets when the moving averages and the prices all coiled up together. It's almost normally a sign before they explode out of there. So for dollar yen, well, on the weekly chart above 114.50, right, closing above that, well, that is, that's bullish for the dollar, weak for the yen, and beneath 108, all right, closing beneath there and continuing, well, that becomes, strong yen, weak dollar. That's the way I look at that. It's just there in a range, and hopefully you can see how kind of clear that is on the weekly chart. Okay, so why don't we have a little quick look at the COMDOLs, then I'll go into a few of the sterling and euro. Right, so COMDOLs, when I'm looking at that, is that's the Aussie dollar. All right, so it's a bit of a strange one. All right, as I said, the kind of, I'm just going to zoom in. Aussie has done okay against the dollar, but as I said, it's more a case of the weakness of the dollar, all right, rather than any particular implied strength in the Aussie. I'm just going to try and there we go. Okay, so we're in a little bit of a channel up there on the weekly, all right. It hit the weekly 200 and it has reversed and rolled away from it. So price is now beneath the averages, right? Look at that. Price is beneath the averages, all right. Okay, but what we can also see is every time it's got down there, it's bounced. So at the moment, you'll be looking at, is there a reversal, pattern there that could launch you back up to around about that 79. So alternatively, all right, if Aussie dollar gets beneath that sort of kind of channel line to the south and starts to fall, well then that's invariably an indication of further weakness in the Aussie dollar and strength in the US dollar. Looking at Kiwi dollar, all right. So Kiwi dollar on the weekly chart again. We had this is an interesting year, all right. We had a push up to the this kind of this sort of we've had a level here for the last year or two, around about 74. Okay, around about 74. What you could hopefully see is that every time price got up to sort of 73, 74 zone, it fell away. For the first time in a good while, it closed above it. Let me zoom in there. Closed up there above it, all right, and we were looking, it's closed above that 73, 74 zone. It's closed above the weekly 200. Are we going to see a proper breakout here? No, of course not. That's because Kiwi dollar doesn't do that. All right, what happens is it rolls its way back down to this kind of 68, 69 zone, which is where we are again. Okay, in which if you look at the chart, we continuously seem to bat about here. Okay, there we just seem to, for the last sort of 3 years, getting towards that zone has been there. It's not as clear as nice maybe as the dollar yen, but you can see it's definitely rolled down there. And personally, I'd be looking at getting beneath that 67. All right, okay, weekly holding, running that is once again, that is going to be weak Kiwi dollar, strong US dollar. All right, and as I said, the dollar has been weak, but it shows you how kind of those COMDOLs have certainly the Kiwi dollar has been the whipping boy for the last few months. It's been weak across the board against everybody. Dollar Canadian then, all right, is here we go, let's zoom in a bit. Here is, this was a great example for a good part of the year of the show about, that dollar weakness, US dollar weakness we talked about, because you can just see that was just one-way traffic there, wasn't it? And, up until, that fell down, and then we've had a little rally the last few months, all right, 121.83 up to 127. So, we had a 500 pip rally there, okay, over the last few months. And once again, what do I see here? I see that price price is, in between the 200, the 20, and the 50, okay, which are all sloping down together. They're all kind of coiling up together, and so that starts to make me think, all right, so price all coming together before it explodes out. What I'd be looking at there is just saying, well, okay, maybe if on a bullish scenario would be move down towards that 200 period moving average, which it then uses to create the right shoulder of a head and shoulders pattern before rolling up. And what would that show? Well, that would show as an element of dollar strength and Canadian dollar weakness. But the interesting thing is here is that the Canadian dollars started their interest rate rises this summer, hence why we saw an element of Canadian dollar strength across the board. At the same time as the US, rose up there as well. So there's going to be a little bit of a battle there, and part of that battle is also sentiment led in terms of people are seeing that. Donald Trump is being a little bit of a character on the world stage, whereas the Canadian Prime Minister Trudeau can't seem to put a foot wrong at the moment, and so there's an element of that kind of sentiment filtering through. Whether you think that's right or wrong, you might have a different view on that. The reality is we trade what we see as traders. So there was a little bit of a gallop. All right, the dollar Swiss. I'm not really going to go into too much because it's not really it's not really that very interesting, to be truthful. It's there's far more interesting things going on elsewhere. So here we go. I've just brought up a profile here on the British pound. We've got a few minutes left to go. We've looked at pound against dollar. All right, that's just been strong. Looking at here we go, pound against the yen for the year. Well, it's actually, once again, it's been pretty similar, hasn't it? There's been a little bit of a once again, it's just ground its way north. That's giving us an indication of sterling strength, yen weakness. It's just grinding its way there. Okay, it's above it, and that's and I don't see any reason for that not to continue. Okay, the only thing that would change that is some terrible news about the UK comes out, which changes it, or there is something that happens to cause the Japanese yen to really strengthen, and at the moment that's not what the Japanese want, so I don't expect it to happen. Let's have a look at one of my own particular trading things. Spend a lot of time between the UK and Europe. The euro sterling rate becomes very important to myself, and what we saw this year was, well, what I've been looking at is, for a lot of the year, kind of looking around about the sort of 88 level, having pushed up after Brexit. Okay, I looked around about that 88 level, seemed to be a little bit of a kind of a point of control, level of control. After the let's say the Macron bump and the Theresa May floundering, we had euro strength there and sterling weakness, right, which then has rolled off. And actually, what I see is that actually for the last sort of couple of months, what we've been in is a very tight, small little range. There's a couple of reasons for this. I talk about in terms of trading financial markets, I want to be, in terms of FX markets, I want to keep it simple as possible, and I want to be sort of trading, buying strength and selling weakness. That's my general plan. Buy strength, sell weakness. That's keep it nice and simple. All right. But on my own particular currency matrix, working it out, for the last couple of months, all right, number one and number two has been either the euro or the sterling. They have kind of swapped about back and forth, all right. They have both been the strongest. As I said, I want to buy the strongest currency against the weakest currency. So last week, euro was the strongest, Canadian dollar was the weakest, so I wanted to be a buyer of the euro CAD, right? So that's what I want to see. So when both two are very strong together, well, that's actually it's like two rams butting heads together, and actually that's exactly what we're seeing here. This is the daily chart, all right, and this is the euro sterling has just been in this range, right, between 90, psychological level 90 above, and then about 87 to 87.50, 88 at the bottom, and it's just basically cycling back and forth, up and down between there, and that's what we're looking at. That's what that's how I would look at it. So if you're I talked about when you look at those American indexes, you want to be a dominant trend trader. But if you're a range trader, well, this is your nirvana, because you look to sell at the top and buy at the bottom, and you do that until the range breaks. And at some point the range will break, because that's what happens. It could take 2 weeks. It could take another 2 years. We don't know. I suspect it won't take 2 years, because it's the euro sterling, and I think Brexit negotiations, some comments or something will be signed or something will be said that will have a knock-on impact on everywhere. But for the moment, euro against sterling is in that range, and that's where I see it continuing to, until we get some further information coming out of the particular negotiations, and to see what agreements we have. So what I'm going to do is I'm just going to do just one very quickly on here we go on the euro dollar. I just want to have a quick look at euro yen. There we go. This is maybe just change that a little bit. Just want to have a little look at euro yen, right, in the sense that it's still an interesting kind of chart to take a little look at. Here's the weekly chart, and what we've seen is, in the old days, he says, it used to be seen that euro yen was an indication of risk. Okay, so when people were comfortable with risk, then euro yen would rise. When people were scared that the world was going to fall apart after the GFC, then invariably the yen would strengthen and the euro yen would drop. And actually, what we've seen here is this year is euro yen has despite the having our little that's a sort of kind of little Macron bump there, a little bit of Macron and UK election. What we've actually seen is, for the most part this year, once again, we've just seen that just been pushing up there, okay, and there we are. It's just been an indication of euro has been strong, yen has been weak. So the world and his wife has been happy to take risk on, and that's why we see indices hitting all-time highs. That's why we've seen oil coming out of its particular range. That's why we've seen particular currencies do some fantastic work this year. Okay, but when I look at euro yen there now, I see that in a particular, once again, it's in a little bit of a block range there between about, what's that, about 131.40 and 134.40. So it's like in a 300-point range there, right? And I'll be interested to see which way that breaks out on a weekly basis. Break of that, where does it hold? Does it hold above it? Well, that means people are still very happy with their risk appetite. Start to break beneath it and then get beneath that and get beneath 130. Well, then I start to get an indication that perhaps people are worried about stuff coming forward, and I would be keeping an eye on that. So there we go, ladies and gentlemen. That was a bit of a gallop through the charts, okay, for this year and for next. I hope you found that useful. I hope you found that giving you some food for thought. As always, the weekly chart is a fantastic chart to look at. So take a little bit of time. You can just sit down at a weekend, when the market's closed, and do a little bit of a look at what's going on, and you'll be able to see to see what the market offers you. If I don't get to speak to you beforehand, I hope that you get to enjoy the holiday season, and I hope that you get to, I wish you the very best of success in your own trading, and I look forward to helping educate and guide you through the Valutrades webinar series in 2018 and beyond. Trade well, and we'll speak to you soon. Many thanks.